Morning, good day, good evening. This is YieldMaxMindset coming to you with our Robinhood portfolio review for year 2, week 2. All right, this should be a short video. Of course, we always say that, but this one should be short. All right, let's get this out of my way so I can see. All right, so you can see my investment account amount says $59,660. Live, we're up $300. Back to the day, we're up $787. For the week, we're up $10,855, which is very nice. For the month, we're down $3,713. For the past 3 months, we're up $10,721. Year to date, we're up $10,092. For the past year, we're up $37,442. And all time, we're at $25,446. All right, so does it show here? Yeah. So no, it doesn't. Let me back up. So our total available margin is at $130,851. We've used $113,666. Our buffer is at $12,221 for 21.52%. As you can see here, this is where our buffer's at. Let's see here. Buying power is at $17,785. All right, so if we were an interest rate, you can see is at 5.25. First $1,000 in margin use is free. Here are our interest rates. Now this could change this week if the Fed lowers the interest rate. And I think I've heard them saying maybe at least 25 basis points. So if that's the case, then this 100 to 1 million that I'm currently getting at 5.25 will be at 5%. Now, if he happens to do 50%, then we'll be at 4.75%, which is very good, very good. All right. So if we were to make a withdrawal this very moment, we could withdraw up to $7,700 right now if we wanted to. So that's cool. But we don't, because we're trying to allow some of the dividends to pay back some of the buffer. And we were waiting for some of our positions to go into profit and sell off. So that would be Palantir. Let's open it up. Palantir. Let's take a look at it. Wow. All right. So right now it's at $170. So it's moved this past week from this time last week was $153. And right now is at $170. So that is almost $18 gain in a week, which is great. And the last week or two, some of the positions have gradually been coming back. So they may be having the interest rates already baked in. And if not, then we could potentially see some nice run. At least that's what I'm hoping for. for September and then for the remainder of the year, because it would be great to get back in and make some nice dividend payouts. All right, so let's see here. So this Palantir, so right now our market value is at $25,650. We're up $5,905 in profit for average cost of $131.63 for 150 shares. And so a few videos back, I think the highest we had seen it in profit was $8,400. I think she had gotten up to $188. So it's been stated that she's going to 200 and possibly 225 by none other than Chris Sain. So far, he's been very accurate on his predictions. And he also has mentioned Lyft, about doing options on Lyft. He's got 2 videos that he spoke on this. He talking about these could be very profitable. He sees Lyft going to He said he see lifts going to 20 and also going to $30. And then he showed users how to buy options. And this was around when it was like $15 and $16. Now it's at $18.84. So I was considering doing that. I haven't done options before, but he showed his video what to select and everything. And I think he has it as set out as far as 2027, I think. So it's something I'm considering. We'll see what my distribution is for Coney this week. And we'll see. I don't know. I haven't done options before, but look here. It says the available buying power. Is that right? Yeah, 17,000. I was thinking that was for options. I was like, okay. But anyway, let's get back to where we was at. All right, so our big positions. All right, so Coney, you can see right now in the overnight market, it's up 6 cents. So let's talk about the time. Right now it's 1:43 Eastern time and 12:43 Central Standard Time. All right. So let's see what Coney's done this week. All right. So this time last week, Coney was $6.80. So it is up 41 cents in the past week. At 41 cents, I believe this was at about 46,000. So it looked like we made about $5,000 in profit this week. So yeah, so basically we can go 0.41, right? 0.41 times 11,600. $4,756 is what we've recovered in profit this week with Coney. All right, so we're looking for some continued increase, not just with Coney, but the overall market to get back to some levels we was at. All right, and let's see here. So my market value with Coney is at $83,520. We're down $41,480. And our average cost is at $10.78 for 11,600 shares. All right, our other big position is Misty. Misty's at 1564 right now. It's up 4% in the overnight market. All right, let's see what it's done this past week. All right, so Misty this time last week was at 1529. It's at 1564. It's up 35 cents for the past week. All right, so our market value in Misty's is $15,640. We're down $10,056. So that will help our margin buffer a lot with Coney Misty. If they just start to make some retracement back up, we'll be good. So I think we're still down. So we haven't went down any further in the market. Now, if the Fed doesn't cut interest rate, yeah, we might go down potentially. I don't know. I'm just listening to what everybody else saying. I'm no TA. I'm not a techno analysis, so I can't tell you. But I'm optimistic about the interest rate being cut and things moving upward, especially for the remainder of the quarter, right? So our average cost is $25.70 for 1,000 shares. Our third big position is OT. All right, it is at $5.57. All right, so this past week, Coney is going up 7 cents in the past week. So last week, this time was about 5.49, 5.50. So it was up 7 cents. All right, so our market value is $8,355. We're down $2,200 in this position, and our average cost is $7.06. Yes, we would love to bring down our average cost in OT, but right now we're trying to create some buffer, and it's not more so for buffer's sake. It's just I'm in the process of, with the last few months of the year, I'm trying to get the margin down, and so I'm looking on waiting on my positions in Palantir. I did have some hood. I sold it. I wish I still had some. Let's see what the current price of hood is right quick. Wish I still had my hood. I think I had it at $93. So right now it's at 115. 115. Why that thing came on? All right. So it's at 115. And I think with the things that y'all saw the Robinhood Summit video, they got some nice things that are coming out. And I think Robinhood has the potential to go up even further. As more users come on, you can create multiple accounts now that you couldn't do before in Robinhood. They're going to I think the first of the year they're going to have a dividend tracker set up for you can track your dividends and do your average calls and see how it's progressing. They got option trading stuff going on. You can do shorts with an option trade. New stuff coming out that Robinhood hasn't had in the time past. All right, so our dividends, we got XPay this week. XPay is at $54.65. Our market value is $609. We're down $11.86 for an average cost of $55.71 for 11 shares. All right, so we got paid. We had 10 shares and it paid out 0.9528. All right, which is now XPay. So if you all are watching, do I have that pulled up? I don't. Here we go. So check this out. XPay. If you're somebody saying I want a consistent payout, why does my computer keep coming on? All right, if you want a consistent distribution amount, XPay, it pays exactly 95 cents every month. 95 cents every month. If you just say I want to know what I'm getting every month, XPay is the right way to go. And there's some sort of tax privileges with their this ETF. I can't remember what it is, but you can see the 52-week range has been between $44 and $62, but the dividend is consistent. All right. So we got Palantir. We got dividends paid out for it. So this right now is at $62.21. It's up 7 cents overnight. Market value is at $14,308. We're down $920 for an average cost of $66.21 for 230 shares. We definitely would love to have add more. This is below our average cost, but I'm trying to withhold myself from buying anything right now. Oops, that's not what I wanted. Let me see, get back here. I'm looking for the dividend history. All right. So we had 230 shares at $2.44. That gave us $561, right? So our last dividend payout prior to this one was 230 shares at $7.49. And that was $1,723. So you can see just from the distribution amount how 1 week was at 1,700, and then the other 2 weeks were right at 500. What week did that paid out 256, and this week it paid out 749. So that's crazy, man. So this 1 week is equal. It's still less than these 2 weeks right here combined. All right, moving right along. As we said, we wasn't gonna be long. All right, like I said, Lyft. Chris Sane was mentioning this, and I'm considering doing options on this. I haven't done options before, but he gave a step-by-step instruction on how to do it and what the intent and purpose was. So, depending on how my Coney distributions pay out this coming week, I may jump in the game either that Friday or perhaps next week. But then who knows if the interest rates get cut, Lyft could take off too. So we may have to do it before then and get it set, but we'll see. Because I don't know how much money my option would take up. I don't know. So we may play with that this week. All right. Let's see crypto right now. Let's see here. Refresh this. Bitcoin is at 116,462. Ethereum is at 4,664. XRP is at 306. And of course, I know you all want to know where Kronos is at. It's at Kronos has dropped to 23 cents. All right, let's see all right, so this is my crypto account, but we're just gonna hit my big position here. All right, so let's hit refresh here. All right, so it's saying, oh, it's saying is at 24 cents here. All right, so right now, yeah, it just went up because I checked this earlier. It was at 49,000. So right now, we have over 300 and 300 and we have 300,388 tokens. All right, so we have unrealized profit, meaning we haven't sold it, so it's not realized. $49,232 in profit. When this went to $38 with the announcement of Trump Media Company, it was at right at 81 or $82,000, and that's just a difference in, let's see, about 12 cents, 14 cents. All right, so we're just sitting waiting for this baby to run when altcoins start to run up. And if it goes to dollar, that's $300,000 right there, people, for me. $300,000. Now I got about, I think it, so if it did run up to dollar, I would only be able to sell half of it because I got the half of about half of it staked. That's good. That's good. I'm earning stuff at 20% over there, so that's great. All right. So this is our cash only account. It's at account values at $3,986, but the total cost basis, which is the amount that I've got totally invested in this account, is $4,104. We have $45.30 in cash waiting to be invested. All right. And you can see our positions here. I'm thinking about selling this Coney position. It ain't but like a $26 loss if I were to sell it. I want to sell it and probably put in this HOWY or PLTWY weeklies position. Not 100%, or we're going to go with this ICOI position. Anyway, this is where we're at. We're in this account. We're down almost 4% for $163. All right. We closed just Friday up 1.62%, and we was up $62. All right. Let's hit our spreadsheet right quick. All right. So September, our active pay month of September is at $1,929.97. Our dividends for the month of September last week was at $244.88, and we got paid from Group B, and that brought our dividend total for the month of September to $1,009.20. All right, so our year-to-date active income stands at $37,638. Our passive income is at $66,601, giving us a minus my tithes from my active income. So I don't actually have this amount here because I've deducted this amount and paid my tithes, so I'm actually a lot less. I haven't paid any tithes out of this because most of this has either been reinvested or being put back to pay down my margin. So even though when I make these withdrawals, I don't consider this taking profit. I consider this as borrowing from my margin account. So that's why I haven't paid any tithes on passive income withdrawal, because this has actually been borrowed. So, all right. So our combined active and passive income stands at $104,240. Active income average year to date is at $4,182. Our passive income year to date averages $7,400. All right. So our Robinhood goal for the year to date stands at $45 for our gold membership. Robinhood margins year to date is at $2,544, and that's on $100,000. All right. Our average interest is at $282 on our Robinhood account. All right. So our prior margin was at $113,908. It's now been reduced to $113,066. All right, 401k loan is down to $22,091, and so our total debt now stands at a reduced amount of $310,521, down from $313,019 around September the 1st. So in about half the month, we've reduced our debt almost $3,000. All right. Our interest now going on the second 6 months of the year stands at $7,362. Total interest for year to date is at $20,642, which is crazy. All right. So the one of the reason why we haven't made any purchases, so our withdrawal right now in our Robinhood account stands at $7,700. So we would like to get that up to where we can make a withdrawal to hit this baby right here. So I'm anticipating. This is just me. This is just a guess. I don't have no technical analysis. Matter of fact, let's go look at. Let's pull Coney up right here. All right, so we'll go a month back. So Coney was at $7.51 approximately, right? And so right now it stands at $7.15, so it's less. And last month she paid 34 cents, right? So Coney may pay less than 34 cents. Wow. So that being the case, let's say 30 cents. So that's $11,600 times 0.30, $3,480. Now, last month when I got paid, if I'm not mistaken, I didn't have that many shares. I had 11,000 shares, I think, right? And we got paid 0.34. What was that? 34.38. So the amount we'll be getting this time around will be about $3,500. So it's going to be less. So unless the implied volatility was high, it could be a little bit more. So that's about probably what we're going to get, somewhere around $3,500 this coming. But if the interest rates get cut, then look for the next month and what is this? September, October to be a nice distribution. And we get around 80 cents. Oh, your boy's gonna be smiling. All right, so continue where we were. Robinhood withdrawals. This is where we are year to date. You can see a little activity here, and this is because if you on your mobile app and you touch at the top right corner where it says Hood, you have an opportunity to deposit, and that deposit will be put as an entry to, let's see here, I think it's to get some gold bars. Let me tell you what it is right quick. Yep, so today right now it's saying last day. So there's 5,000 gold bars giveaway. Now, if I'm reading it right, it's saying 5,000 gold bar giveaway. All right. It says we're giving away 5,000 gold bars worth $100,000 each to celebrate Hood Month. We're giving away 1.2 million in solid gold to members. It says for a chance to win, every entry dollar you deposit is an entry to win. More deposit, more entries. Mail-in entries are available. Hold your deposit to keep your entries. Hold deposits and keep gold until September the 15th. Okay, which is today. So today's the last day. Winners announced by October the 17th. 3 lucky winners will get 1 kilogram bar worth $100,000, and 4,991 others will get 1 gram bar. That's what it's saying. So hey, if we get $100,000, that can change a lot for a young person or an older person or a middle-aged person, right? All right, so I withdraw from Robinhood account. Oh, let me go back here. So these deposit, I was doing what was it, about $5 a day. Then there was 2 or 3 days I did $10, and then I think yesterday I did $100. So we got one more day, and that's tomorrow or today, tomorrow now. If you want to make any entries to get in that, so it's possible I may make another $10 or $50 just to. All right, here's the withdrawals. Year to date is at 10,748. All right, so our Coney, this is my estimated of cost basis, $126,207. We received dividends of $58,361. So the next time, this time next week, when I'm reviewing this, we will be at least $61,000 or possibly $62,000. All right. And then right now we're $61,835,000 from being in house money. All right. So, all right, with Misty, we're at 21,773 total in dividend received. Since we've been investing in Misty, we are $4,368 from away from having house money. Now, combined, Coney and Misty's cost basis at $152,000, 349. All right, so we receive a combined $80,105 in dividends from Coney and Misty. All right, so we have $72,203 remaining to pay off before we're in house money for both accounts. All right. All right, now let's get to Divi Tracker. Divi Tracker has us at $93,537. It's in our monthly average income for dividends. It's going to be almost $7,800 a month. We have our estimated amount at $7,400 a month. That's what we're averaging. All right. Let's see here. Market values at 60,000. Robinhood right now is almost at 60,000. Sorry. All right. Cost basis $233,835. That's what it has it at. Has my margin balance at $113,126. All right. Ready? All right. Let's move along. All right. So Snowball Analytics has my investment value at $64,442. Total profits at $48,717. Basically, they're saying we received dividends at amount of $108,000. We are down $58,000. We received profit and losses of over $2,100. And that leaves us a positive $48,716,000. All right. So here I finally was going through and clicking these, and I found some old stuff and got rid of, like this microvision, these things, and nano dynamics stuff I did probably over 5-6 years ago, and it was had value that wasn't factored in right for just my dividend account. So I got rid of a lot of those so it can reflect my true value for my dividend account. All right, so here total Coney shares is actually $11,632. That includes the Charles Schwab account for average cost of $10.77. And it said my cost basis is at $125,304. So my current value is at $83,000, and dividends received is $58,371. We're down $42,000. So just getting 40. So just getting some of this Coney back and break even, Misty back. That's $52,000 right there. That changes our margin buffer. That changes our buying power significantly. All right. So we've sold Coney and some Misty, and each one of those has been showed in the positive. See here, dividends is 58,000, profit and loss is at 1,300, and we have a negative capital gain of 42,000. But that leaves us total profit of $17,625. That's where we stand in actual profit. All right. And here's Misty. I'll let you all look at that instead of just reading it. Here it is with Palantir. Pop up there. All right. AMD. All right. So all these are starting to show total profit. You know, you can see some that haven't, like ICOI, which is a Bitwise fund. It's only down a little bit. AIYY, Hui, it's in profit. Most of these are in profit. We're not down too far in these positions, other than Coney and Misty. All right, so bada. So total dividends received here. I don't know the other position what we saw was 108,000, but here it's saying I've received 100,000 in dividends, and we have a negative 58,000 in capital, but that leaves us with a total profit of $42,618. All right, let's get to our Q&A. We're moving right along. Don't have a lot of Q&A questions, so this is going to be nice and short. All right, let's see here. Kelly says, Misty's killing me. He got 2 likes on that. Ice Cold said, yeah, I feel ya. I took a 44,000 loss on Misty. Sold all my dividends. Sold all my other YieldMax fund to 70,000 market loss total, but paid back my margin and my HELOC starting over. Man, Ice Cold, you had some money there, brother. 70,000 loss, and even though it was a $70,000 loss, you were able to pay back all your margin, and you was able to pay HELOC. And now you saying you fit to start over. And I'm assuming, hey, you've learned from your experience. You learned what not to do, what ETFs probably work better for you. You know, some round hills, some of the curve, some others, granted shares, some of the YieldMax, depending on. But anyway, your strategy is going to be different, I'm assuming. But yeah, my mind was blown. I said, no way you took a 70,000 loss, man. No way. Then I said, I'm not surprised Misty has dropped this slow. I'm more surprised that it has stayed down this long. MicroStrategy must not have enough volume over there. Surely they will get tick up shortly. But yeah, man, ice cold, man. I'm sorry to hear about that loss, man. That's a lot. That's a lot. But hey, sometimes people say, you know what? I'm cutting my losses. I'm not bleeding anymore. So I'm not going to tell another man what to do with his pockets, with his money in his pockets. All right. All right. So hardwood floor furnishing 101. Hardwood floor furnishing 101. My brother got a business here. He does. Hardwood floor furnishing, refinishing, excuse me, 101. All right. So he's got a lot of videos out here showing you how to do like repair work, probably how to install it, how to clean it. All right. Check his channel out, people. All right. He said, thanks. Where did you find the current dividend amounts not posted on YieldMax site? I said, click this link to their website and sign up with your email address, and you will get the information Wednesday morning. You can also get the information from their X account. Good friend Al says, some good payout this week. Thanks for the review. I say, yes, sir. Misty's still paying 9 cents. It's still paying the bills. Blue River says, thank Bud. Great video. I say, glad you liked it, sir. Roll up, Bill. I wasn't expecting Plady to pay a good amount anyways this month. He got 3 likes on that video. Mike Lesser said it should have, but there were a couple of dips. Much better than Nvidia though. If it looks to be going lower this month, then I'm out of Nvidia. I'm assuming he's talking about Nvidia, not AT. There's always other fishes in the sea to bounce to, such as NVYY or NVDW. He got 2 likes there. I said Play D paying $2.44. Not bad at all. Not bad at all. Mike says better than 65 cents. Mike says better than 6. Yes. Yes, Mike. Yes. 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 Way better than 65 cents. But 65 cents is better than SCHD. Of course, SCHD ain't losing value though. So, you know, 65 cents. I think you said, Mike, that anything under $1, you're done with them. Anything under $1, other than probably weekly pairs, because they're breaking that monthly price down by 4. But I get you, Mike. You stick with your strategy. All right, let's see here. Shorts. All right, let's see here. Excuse me. Fizz says, hey man, can you make a video about using margin high yield ETF? I'm confused with margin. Now, so margin, I'm gonna be honest with y'all. If you all are listening here, I watched videos trying to get an understanding of margin in general. And then I watched videos with Robinhood margin. And I think I may have came across a video that did help me out. But even with the information from your Robinhood app, it doesn't show you the live scenarios, and it's hard to say based on how it's been used with me. I will say, I'm gonna verbalize it here. It's hard to verbalize because it depends on what positions you're in. It depends on how much you borrowed. But in general, say if you borrowed 10,000, this is how margin work. If you got $10,000 in your account before you turn margin on, the minimum requirement is 2,000 to even start a margin account. So you need to have at least $2,000 in your account, or stocks that has value of $2,000 to flip on the margin option. Excuse me. So hypothetically, let's say you have $10,000 in your margin account. All right. You buy, let's say you got 10,000 in your margin. Your brokerage account, excuse me. $10,000 in your Robinhood brokerage account. You go turn margin on, it doubles that from 10,000 to 20,000. All right. So you have your positions in there that you've already bought with 10,000, or either if you just have 10,000 cash in there, then you have 10,000 plus another 10,000. But you don't want to borrow the whole $10,000 they give you. It's suggested that you stay between 30, maybe 40%. Because if you look at my account, I am definitely looking at about what? Let's see here. Let's see. I think you do this like this. Hold on. I think you go what? 130, 851 divided by 113,066. So it's the other way around. So it's 113,066 divided by 130,851. So I am using right at 80% of my available margin. And that is considered very, very high risk. So I'm not encouraging or suggesting anyone follow my footsteps, right? And using margin. So, but it always suggests that you borrow no more than 20 to 30% or 20 to 40%, so that when you have a 20% or 30% dip in the market, you got the buffer. You cause, so what is his name, Oracle, he's had videos where he showed you how to maximize the buffer and still have buffer. And I don't know if he still have those videos, because I was watching him last week, and I think he's gotten rid of his prior videos. I don't know if those videos still exist out there on his YouTube channel, the article ETF or something like that. I think he's starting something new. Anyway, it depends on so many variables, but I found margin not to be as bad as people say it is. Yes, I got margin called back in April the 1st when the market took a dip. Uh, it wasn't like that blindsided me, right? I knew the high risk game that I was playing. I knew that I was borrowing 80 to 90%, probably 95% of my margin. So I knew, I anticipated. This time I did dip 20%, and then it came and dipped with another 20 or 30%. I did get margin call, but the next day it bounced back. I was good. I did get another warning the other week, a couple weeks ago. Didn't have to worry about it. Things bounced back. So, so I sort of understand what I'm doing with my margin. All of my margin isn't being used in high yield dividends. I've got Platy, I got Webull, I got SoFi positions that I'm going to use as swing trades to make profit. And it sort of helps stabilize my account too. But yeah, so if you got 10,000, you turn margin on, you get 20,000. If you got 10,000 that you've already have liquidated in positions, you turn it on, you still get another 10,000, right? But you don't want to borrow no more than 20 to 30 or 20 to 40% of that. So you would only borrow maybe 3,000, or at max, if you went 50% of that, it would be 5,000. All right. And it all depends on what positions you're in. These positions have a tendency to dip real huge in the market. And then you never know what variable, what a company that could just have a bad earnings report. But I can say that once I got in here and started using margin, it was a lot easier, and I love it. I love Robinhood margin because I'm able to take the dividends and take that out of Robinhood account and go pay off some other bills, or at higher interest rates. You saw I'm at 20K right now in interest. So my plan now is to let some of this margin, because I got my account to where I'm averaging about 7,000 a month. And check this out, I'm averaging that on the low end, right? Market being down, the positions. So when they do make just some recovery, I expect that the monthly distribution to be up. But I know at least I got maybe $5,000 to $7,000 each month coming in, and that's pretty good. So even with $113,000 account, if you're making $7,000 a month just in dividends alone, it won't take you long to pay that off. You're going to have some up months. You're going to have some down months. So if I didn't have the outside debt, I would be able to just flourish with this Robinhood account. But once I get this outside debt paid, and then I start to really sincerely work on my margin, I'm just going to get the margin down for enough so I can withdraw money out and go pay off the higher interest, because I'd rather have it sitting in Robinhood at 5%, and then versus another account sitting over there at 28%. So yeah, so margin, no, it's not that bad. People get scared, but it can be a little nerve wracking, because even this gentleman here, what's his name? Alvin? Is it Alvin King? Alvin Jones? He says, "Are you not worried about a potential margin call with such a small buffer? In the event of a downturn, you may want to keep a larger buffer. He said, respectfully, margin call can be stressful." And I absolutely agree with him. But I wasn't too worried, because when that happened to me in April, I said, okay, let me take this money that's available and put it in positions that has somewhat stability, so that even when the market dips, it won't take that available buying power away. So if you have available buying power there and the market dips, it goes away. So what I did is I just said, let me put it into something that they can't take back. It will potentially go down, but they can't take the buying power away because I put it in positions. And so that's what I did with Platy and Weeble, mainly with Platy and Hood. Those were the first two I did because I knew they had potential to go up, and they did. So all that helped my buffer. Just, you learn, you know, start small. I say start small for those that are not familiar with it. I had did margin before, but I love it over here with Robinhood. I wish I'd been over here earlier. I said we working on it slowly but steady, just waiting for play to go up to $200. Then I'll sell it for profit and pay back the portion of the margin. I did get a margin call back around April the 1st, though it's not as bad as people think. So look, to get your buying power below your margin percentage, not be you may not be margin stacked correctly. And this is some of the things that article mentioned about how you stack your margin. Buying the low ratio percentages like 25 and 34. 25 and 30 before you buy something that's 40 or 60% with margin ratio. I believe that's how he said stacked it. All right. The sniper says, how are you able to get approved for all that margin? All right. So I said the minimum requirement is $2,000. I started with about 30,000. From there, every time you get paid in dividends, it's depositing cash. So the amount of margin increases. And when you deposit cash or dividends, Robinhood is either going to give you 2x or 3x. Whatever that dividend or the cash amount is going to 2x and 3x it as far as you availability to more. So if you got $1,000 in dividends, Robinhood is going to increase your margin by $2,000. So it's going to 2x it. It may 3x it in some instances. I said from there, so the more money you deposit or dividends is either 2x or 3x. From August to September to 24 to August to September of 25 as 1 year for me of receiving dividends. So I've been receiving dividends back August of last year to August of this year, or September this year to September this year. And so therefore, I've been able to go from 30,000 to having $233,000 invested in this account, even though you don't see it on the initial investment, but there's about $168,000 that is invested. And then you have to realize I'm down 41 and then 10, so that's $50,000 that I'm in the hole just on Coney and Misty. So that puts it at almost 200,000. Then you look at all the other positions. That's about another 30,000 for the $230,000 total. Reese says, bro, I was wondering if you could do a video to use margin. Also, how you pay margin down. So the simple answer is when you get paid, there is no due date to pay your margin. The only thing Robinhood do is charge you a certain percentage based on the amount that you borrow each month at a designated time. That's it. There is no due date. It is no due date. Do you all understand that? Y'all saying, because normally when you have a loan or margin, a house or car, you're like, I got a due date on the 15th. I got a due date on the 1st. This doesn't have a due date. So by these being weekly and monthly dividends, when you get that distribution, it reduces the margin balance. So if you have $20,000 in margin that you borrowed, and next week you want to get paid $1,000 in dividend, it reduced that $20,000 down to 19. So you no longer owe 20, you owe 19. You have a balance of 19. Now, when you get that 1,000, this is what I've done. Even when I got that 1,000, to go reduce that to 19, like I said, Robinhood 2X's. So instead of having 20,000 and I got the 1,000, it goes to 22,000 of available margin. So what did I do? I take that $1,000 that I just got paid in dividends, instead of letting it go to the reducing it, I turn around reinvested that what I just got paid. So that's going to increase the distribution the next following week or the next following month. And I just kept repeating that cycle over and over and over and over. And so that steady builds up my margin that they give me, because if I'm, because one month I got $14,000 in dividends, right? So guess what? When that $14,000 got deposited into my account over the course of that month, it became 2x. I had an additional 14,000. So what did I do with that 14,000? I used it to buy more. And that's how it keeps going up and up. Instead of letting the margin be pay off, I just kept buying more and more. So the more you get, the more dividends I get, I turn around and took that and bought back. It reduces the margin. But if you turn around and take that, instead of allowing to reduce the margin, you use it to buy more. And it still increased the available amount that you had to borrow. And I just keep repeating that pattern. And that's how I went from 30,000 to $233,000 in a year's time, just taking the money that they gave me and buying more dividends. And when you buy more dividends, guess what? The next month, if it's staying around the same or more, you're getting more money. So each month you're getting, Robinhood is increasing your margin because you're depositing cash from dividends. I'm reinvesting those dividends, which is increasing my margin when I get paid out again. It just keeps repeating the process. It's just a strategy, you see. All right, we got some posts here. We was about to be done, and I got to run in my mouth here. All right, Growth Stock Life says, so are you net positive on these positions? I said, I don't think so. I received 100K in capital. I have a negative 58,000 in total in gains, and I have total profit of 42,000. Adrian says those PT dividends were sick. That money. I said, yes, sir. Andrew says Platy is the only good YieldMax out there. I said Platy does pay good, but it's not the only one. You're overlooking HOOY. You're overlooking the Big 12, overlooking some of the weeklies like CHPY, I believe it is, or holding a NAV, and they're paying like 30 and 40, 50 cents each month. They're not paying the big dogs, but if you want something solid, they're doing it. All right. The fairy says, what's happening to Ulti? I said, she's still paying $1. It's just Ulti is they're using the positions that Ulti is holding, they're down, so Ulti is down. That's it. Once they recover, once we get this interest rate, they'll go back up. Ulti will go back up. And that's my thinking. It says, brother, I laughed out loud. I said, nah, just a servant. Just a servant. Eric says, amen, brother. I said, every bit helps. All right, I think that's it. He said, incredible. He's talking about the Reddick new position coming out. I said, don't think we've seen these movies. Don't you think we've seen these movies before? And I'm basically saying these positions, they come out, they be big, and then they drop off. He says, fire. I see you, brother. I see you. All right, that's it. This is YieldMaxMindset. We got Group C coming up. Let's hit it right quick. We stay on an hour. We got Group C right here. We got AMD, Coney, Kavana, Hui, and YMAX and Ulti paying out this week. And I got probably some different ones in the cash account. All right, we're under an hour. I'm out.